Man. Good afternoon, George Cavalagos for HFT Bonds. I hope you guys were faster than I was. Bought the breakout. You know, we took out the previous highs in the 10-year at 04 plus, ran them all the way up to 12, and I couldn't get out fast enough. I think my stop got filled 3.5 ticks. I can't remember now. Worse than where I had to stop, which was probably too wide to begin with. And that turned a good morning into a bad morning, and then I spent the rest of the day trying to fight my way back. And now we're sitting at the lows, and it's not giving us many opportunities. After a big outside day like this, every time frame I look at is on a sell signal right now. I gotta imagine we're looking for some kind of a lower low. I wouldn't be surprised if we do the same thing that we've been doing lately, where you get a little bit of follow through. Like this morning, I was looking for a higher high. We got a little bit of follow through, and then immediately tore your heart out if you weren't fast enough to take your chips off the table and run, or reverse. We've seen that so many times lately, so keep that in your mind tomorrow. And tonight, we got a bunch of data tonight. China starts it off, I think, about 8:45 Chicago time with their flash PMI number. And then, I think between 2 and 5 a.m., all the EU, Germany, France, Italy PMI numbers are coming out. And then we get jobless claims tomorrow morning, and then our PMI data comes out. We also have a Fed buyback tomorrow, pretty hefty size, I think between the 5 and 7 year area. So stay nimble again. Hope you're faster than this old man was this morning. And don't really have too strong an opinion. We had a rare day where we had both outside days down in bonds and note and stocks. Somebody said it's the first time since 2007 that that's happened. That's a long time in this world, I think. But we'll see. At some point, if stocks keep going down like this, they'll find some buyers in the bonds. The Cypress gaps. Thanks to my friend Bob again for pointing out those Cypress gaps. He's a great follow on Twitter, guys. He's a fantastic trader at Fade Trader. Check him out. But the gaps in the 10-year, 130.31 to 132.02. 142.02 to 142.10 in the bonds. Keep an eye on any kind of fill that gap and reversal trade. I don't know if we'll be able to reverse until we see some of this data tonight and tomorrow. And even then, it might take a little bit more down move in equities to give us some kind of a real kind of nervous about, not being long bonds kind of trade. We had a couple glimmers of that, but we really weren't able to expand any kind of rally in the treasuries today. The damage has been done. It's going to take some time or lower prices to solve some of that damage in the treasury markets. So try to sell rally. I guess if you're following the game plan, the old lows at 132.16 or at 143.08 in the bonds would be a great spot to take a look at it. There is often a tendency to overlap those levels by a little bit and then come back down, so keep that in mind. Something along those lines. And have a great day, guys. I will see you tomorrow morning, hopefully. Get a little rest. Today was amazing, to say the least. Have a great night, everybody.